Happy St. Patrick's Day, everybody. It is March 17th, 2025, and we have options expiration on Friday. We have NVIDIA this week with some technology announcements, and we have Jerome Powell, going to tell us that, hey, everything looks all right on employment. Inflation is still coming down, so we're not going to do anything with interest rates. Maybe next time, maybe the time after, we'll see. And I'm not really sure what the market is going to do about all of this stuff. Here's what I know. After the correction that we've had from the high in February, we are likely to see a correction if the following takes place. If we do not get a 3.5% rally that holds over the next 2 and 4 week period, then we are most likely going to get a bear market based on history. So what we need to see to avoid a bear market is probably a 3.5% gain this week and next week combined, and then it has to hold for 2 weeks after that. That is the historical precedent. You know that I've always said that the data sets aren't big enough to really be all that predictive, but that is the precedent. So we shall see. This is Paul Krugman's Substack, and I do subscribe to this one. I don't pay for a lot of Substacks, but this is one of them. I pay for the Daily Chart Substack, and I pay for this one, and then Sam Rowe. So if you follow me on Substack, you really don't need to from the standpoint of getting my content, because my version of Substack is just a skinny version of the other stuff. So you don't need to pay me for Substack if you have another service. If you don't pay for any other service and you just want like the essential Kirk growth stocks, then I do have a growth stock service on here. I would have that. Here we go. There, Kirk's growth stocks. And I just kind of put the skinny version on here. So if you only want a couple of growth stocks a month, well, there you go. Otherwise, I do think that Krugman is worth following. His analysis has been pretty spot on, for 40 years. So, maybe he's lucky, but generally he's been about right. He had an interview with Neil Dutta a while back. I was just looking for it. I couldn't find the exact interview. I know that it's out there. Maybe it's behind a paywall, but I would like to see that. The gentleman I had on before here, he's on Bloomberg quite a bit. I'd say twice a month probably, or at least once a month. And he's usually a pretty bright guy. He's a Krugman, Keynesian like me, who sees the world for what it is. Look, you have all these human inconsistencies and frailties, and capitalism is the worst system for, all the others, but except for all the others. And for us to have growth, we do in fact need a regulated form of capitalism. Otherwise, all the money ends up in the hands of just a couple people. So we will see what actually goes on here over the next month. But we do know that if we don't get a pretty substantial rally here in the next 2 weeks that holds, then probably we are going to have a problem. Well, it looks like somebody posted the interview in the chat, so go ahead and find that. Is it in here? Oh, is it this one right here? Oh, yeah, there it is. There you go, this. If you just want to subscribe for a month just to get this, maybe you should. This is really a good channel. Like I said, I don't subscribe to a lot of channels, but this guy's a big dog. I used to read him on the New York Times, but the New York Times didn't want to pay him anymore. They're trying to not be the New York Times anymore, I guess. And so, yeah, now he's on his own, but this is a worthwhile channel in my opinion. All right, so I wanted to talk about a few things today. First off, let's talk about options with what's coming up on Friday. So you should have some cash secured puts and some covered calls that are going to expire. So why don't we just take a look at, you see how I get there in margin of safety. You go to resources, and you can always get the options expiration update from the prior month. Or somebody hasn't updated that link, and you have to go to the analysis, and you go expiration. All right. How about option? There you go. Options expiration update for February. All right. So you should see that you'll have some cash secured puts that are likely to expire in March. This one actually might get put to us. Do a quick check. What is the price of IIPR? So Innovative Industrial probably gets put to you if you have the $70 put. That's fine. You don't need to do anything with that. MP Materials is going to expire, both the 20s and the 1750s. Some of these ended up getting sold during the month, but not really any marches. The covered calls is I want to take a look at. So I don't really have any covered calls expiring in March. Do any of you have any covered calls that are supposed to expire on Friday? Why don't we cover those really quick? Does anybody have covered calls that are close on Friday that may be called away or may not be called away? Or is everybody pushed out a little bit further? No, not really anything. If you have any puts that are close to the money, you just let them get assigned to you. As far as a Metis goes, I think it's dirt cheap. So I think you want to just add those shares and stop writing cash secured puts on a Metis. You're just helping the shorts when you do that. So, at this price point, you just buy a Metis. If it's something you want, you just buy it. So, and if you have room in your asset allocation, things like that. So, as far as some of the stocks that we own, I actually have a handful of AST Space Mobile cash secured puts that look like, cash secured puts and covered calls and newer accounts that should expire on Friday, because the cash secured puts were 20s and 25s, so those won't get put to me. And the covered calls were 30s, 35s, and 40s. So the 40s and the 35s will for sure expire. Probably the 30s will expire. And on Friday, if it doesn't look like they're going to expire, I would roll those out, because I really don't want to see AST Space Mobile get called away from me. All right. I do think that we are in a pretty wait and see environment here, as far as, do we get one more puff on the cigar, or are we in full blown correction mode? If you watched the Sunday morning television shows, the news programs, Scott Bessent gave an interview, and he might have given 2 interviews, but I saw one of them. And he basically said, hey, corrections are healthy for markets. So they're pretty much telling you, Elon Musk told you a few months ago, Donald Trump has told you, Scott Bessent, they've all told you, hey, we got things to fix, and if it causes a correction and a short recession, we're okay with that. They've told you they're okay with it. I don't know why anybody is super duper optimistic about avoiding all that stuff. And that is why I have really slow played giving stock recommendations, because I think that the idea that I really want to make sure that I get that last puff on the cigar is extremely dangerous. So I really haven't been buying much of anything. I have trimmed, I've written covered calls. Some of those covered calls will expire. The majority of the covered calls will expire. And if we do get another puff on the cigar, that might be a chance to write more covered calls. Although, like I said, I'm down to a very small basket of stocks. I really don't own ETFs right now. And other than India that I nibbled into in the last month, I in the 401k, I don't own it in other accounts. I just think you need to continue to be conservative here. Be very tight to the vest, 50% cash in that range, a little more, a little less, depending on you. Don't think that you are some sort of super trading guy and go, oh, I want 100% cash. Well, you should never go 100% cash because you're just not that smart. And nobody is. So if you're guessing, oh, I'm just scared as hell, I'm going to sell everything, well, then you don't have exposure to the things that are catalyst driven, because not everything in the market just does what the market does. You don't have 100% correlation on everything. So you still want to hold on to your very best ideas. And that's where I am. I'm just holding on to my very best ideas. One of the ones I wanted to talk to you about today, because I got a phone call this morning about an hour and a half ago, and it was Sirius Satellite. I recognized the phone number because it had come in like 10 times in the last week. I was like, who is calling me from this 844 number? So I picked it up, and it was Sirius Satellite. I was like, oh, okay, I'll talk to you guys. So I have Sirius Satellite on 2 cars, and we had Spotify, and I have Apple Music just because I'm too lazy to download the music that I actually own. which I should do. I should just download what I own from Apple and then stop paying for Apple. But I talked to the guy from Sirius and I listened to his sales pitch. I just wanted to see where he went with it. And they're pitching Sirius Premium. Sirius Premium is you can have multiple cars using the satellite and you get everything they have, including Pandora, which you can use from an app. So if you want to use multiple devices at one time, which is why you need premium, otherwise if you log in one place on the basic service, it kicks you off in another place. But the premium, the special is $10 a month for a year and then $35 a month after that, which I'm sure if you really want a nickel and dime, you can call up and beg them for a discount, or you can let it lapse and then you go back and you can play that game. I don't know how they're going to do that game, but you can. The reason I was super interested about the sales call is I wanted to see how easy they made it. I wanted to see how good their sales pitch was, and it was pretty good. He didn't really come at me with Pandora too much. He just basically said, look, this is premium. It's $10 a month. It gets both cars on there, and you can listen from devices as well, and as many as you want, really. So what I was thinking was he really should talk about Pandora a little bit more, because it's a Spotify replacement. And, I have not been high on Spotify because I think they're pretty disruptible. I think we've seen the artists not be real happy with Spotify, and you have Apple Music, Sirius with Pandora now, and Amazon Music. I forgot all about Amazon Music, but I talked to him, and he said that when he talks to customers, Spotify never comes up. He said it's either Apple Music or Amazon Music that people are getting. And he said that the feature that Amazon Music has that people like is that you could just say, play a certain song, and it'll play that song for you. No, Sirius is adding that. So Sirius Satellite and Pandora, just Sirius XM, is going to have everything that the other services have in the very near future, and already has everything that really Apple Music, Pandora, Spotify have. The only thing you can't do is say, play Satisfaction from the Stones, right? You can't really do that just yet, but that is on tap. For $10 a month, it pays for itself, because we canceled Spotify a little while ago. And like I said, as soon as I'm not too lazy, I will download the music from Apple that I actually technically own, and I'll stop paying for Apple Music. I think that Sirius has the ability, because of the penetration in cars, right? Every car sale pretty much has a Sirius satellite, Sirius XM trial. And it's something like 80 something percent of cars now have Sirius built right in. So it's just free marketing for them, right? 7, 8, 9 million cars a year getting sold in the United States. I mean, it's free marketing. And I think that they're going to kill it. I really do. They pay a fat dividend. They have good cash flow. Warren Buffett is buying up the stock left and right, and now it's a pure play, right? It used to be in those Liberty tracking stocks, and they spun it out, and now it's just its own company again. I think Sirius Satellite is dirt cheap. I think if you don't own it as a dividend investor, you're making a huge mistake. And if you don't own it as a growth investor, I think you're kind of making a mistake. Because I think this stock can triple or quadruple, maybe quintuple, just because over time, there's still a monopoly on the satellite, and they have everything that everybody else has. It seems like a consolidation service to me. Why wouldn't you, for as cheap as it is, have that satellite and then get everything else that you get with any of the other services? It's kind of a no-brainer to me as a consumer. So we'll see. And 7, 8, 9 million cars a year being sold in the United States, depending on the year. And I think that number is going to go up because of the age of the car fleet in the not too distant future. I see really nothing but upside for Sirius Satellite over the next 5 to 10 years. So, I'd say that is pretty much my top conservative pick right now. They have no downside because they're dirt cheap, right? You get a margin of safety on price. People say, oh, should I sell cash secured puts? No, I think you just buy the stock. I think it's pretty cheap. Buy the dips. Just keep buying the dips and build yourself a good position. I am almost to a double position. I have some puts expire. Where did we? you notice in this piece, I'm trying to put what expired. So though I had some Sirius options expire here. These May 24s, I'm thinking that these expire too. You might be able to get a pretty good price on that just now. Let's take a look. Cash secured put. Remember, we keep looking at Ford, and Ford doesn't have any option premium. So those May 16s, yeah, $23. Oh, look, it's $22.91 right now. So 23, you get a $1.90. So your net cost would be $21.10 if you sold the May 23s right now. I think that's dirt cheap. So I think you can buy a starter here if you don't have one, or wait for a down day because apparently it's up a quarter. But I think selling these May 23s, which are basically at the money, you subtract the $1.90, you have a net cost of $21.10, which is way below this price. I think that's an easy transaction for you. So if you're looking to get into Sirius, you get a $1.90 against 23, so it's about an 8-something%. It's only 2 months out there, so there's 6 periods in the year, right? 6 2-month periods. So roughly 6 times 8. 48, 50% annualized return. That doesn't suck. So yeah, I'd fire away on selling those right now. Right meow. All right. I don't think that NVIDIA has enough juice with their announcements this week on technology to really move the market for more than a hot minute. I think Powell putting water on any rate cuts in the near term is going to be a negative. I think we're going to get more mediocre news on the economy this week. We're really not seeing a lot of inflation, but it really kind of has stopped coming down because of the tariffs and the tightening up of the global supply chains, which, again, we've talked about over and over again. It's going to take time for global supply chains to adjust, for us to build stuff here in the United States. I'm not so sure it works. Theoretically, you want to use comparative advantage. I understand wanting to have certain strategic industries here like semiconductors or steel, but putting tariffs on champagne and then we get tariffed on bourbon, and it's just some of the stuff, it doesn't really make a lot of sense. It's just bad for global trade, to be honest with you, and that means less money for everybody because you end up spending more. So while tariffs on champagne might be good for California sparkling, so what? Really, so what? It's not like there was a huge abundance of California bubbles to begin with, which I have warned, drinking my Prosecco. All right. Are there any stocks that anybody really wants to talk about? Honestly, I just don't think there's anything new this week. I think we know that we are in a corrective year. People who are clamoring for one last puff on the cigar, maybe you get it, maybe you don't. I don't really care. I don't think there's a way to predict it either. So if you're going to try to gamble on an upside, hey, just know that you're gambling. As far as my my puts on SPY, they're 550s, and they're for April and May. So I am not really doing anything there. I have a limit order to sell half of my April puts at 16, which they got to almost 14 the other day. We've had this little rally. We will see what they do. I don't know. I think it's too late to buy them, but this is insurance against the long side of my portfolio. Not much hedging you can do, man. Sell into this strength. If you waited and waited and waited to trim, here's your chance to pretty much dump everything in the S&P 500. There's very few out there. Yeah, somebody's mentioning wolf speed. No, cut it out. Just don't. There's nothing special about wolf speed, and you just don't know where that industry is going to go in the very short term. I'm just telling you, if it's not a top 20 idea for you, and wolf speed certainly should not be, you shouldn't be messing with it. You stick with your top 20 ideas. That's it. That's all. Stop gambling. If you want to gamble, go to Vegas, play some craps. If you want to lose at gambling, play poker with me. But I just think that if you're doing anything other than your top 20 ideas, and really even your top 12, you're gambling. You're just really gambling. This is an incredibly weak weak market. This is, look, I don't know what year this is going to turn into. I don't know if it's going to be 2018, 2022, 2008, maybe 2015, 16 when it went sideways. There's just no way to know that, but there is zero argument for big upside. Valuations are still high. Liquidity is flat to falling, and I think it's going to really fall soon. You have problems with the yen carry trade, which could cause all sorts of hedge funds to have to unwind trades, which usually leads to 1 to 2 weeks of big selling. You have foreign direct investment in the United States starting to fall off a cliff. I mean, really falling off a cliff, because it was positive until January, and suddenly it's negative. And I think it's, look, there's just very little to support the idea that foreign direct investment is coming back before next year and maybe later. So most international investors are fairly sophisticated, right? They're international investors, and you have a lot of the world pissed off at the United States right now. So with the tariff war going on, and really there's not a lot of end in sight at this point. I do think it ends rather suddenly at some point, but that doesn't mean that the money comes flowing back in. And I don't think anybody is going to give President Trump the benefit of the doubt. Not the Canadians. The Mexicans are a little bit more beholden. But if you take a look at the history of our relationships with Latin America, we have not really been the best partner. So we'll see how that goes. Europe, I don't think Europe's going to do President Trump any favors. I mean, especially with Ukraine. I just think there's going to be a grudge. So I just don't expect the foreign direct investment to be coming, and we'll see, right? So I think clean energy is a place to look. Somebody asked about First Solar. Maybe, take a look at the 10-year chart. We know that this area kind of right around here. Yeah, I mean, First Solar is getting close. I think First Solar is close. I think that's probably turning into a buy the dip stock. The tariffs are actually good for them, and the growth rate on solar is still huge. And if you're really paying attention to everything in clean energy, everything points to it accelerating even more because of the demand for energy and the fact that oil and gas are gas anyway is getting more expensive. Oil is going to be choppy forever, but until it falls off a cliff. But natural gas, because it's affiliated with oil production and we need it, it just really doesn't make sense to think that, there's going to be a big coal comeback. No, right? How? Tell me how. What are you going to do? So, hey, look, they're building a coal power plant next door to me. Hey, it's going to be up in 2 weeks. No, it's not. There's no way for coal to have a comeback. Not in the United States anyway. So, solar with batteries is clearly the leader by far, by like tenfold better growth rate than anything else. So that's where you need to be focused. I love my TJ Rogers companies, all three of them. So go ahead and buy those or hold them. You should know what those are. I'm not going to give those away on air again. But clean energy is where it's at. Just take a look at iClean. Just starting to come off. I've been talking about this for a couple of months. I think this is the bottom. So you definitely want to buy the dips on this. Or what's the other one? Symbol BW, right? These are a lot of small caps internationally. This is probably, right? That looks like a bottom too, doesn't it? Right? I mean, either that industry is going away or it's going to rebound, right? What is the other symbol that I'm thinking of? Is it QClean? That's right. Yeah, QClean. Take a look at the holdings. One of them has Tesla. Yeah. So this is the one, if you think that Tesla is ready to rebound, this is the one that you buy. So I've been waiting for this one because I don't think Tesla's ready yet. To me, it looks like it should jitterbug and then fall one more time. I think you see Tesla in the middle 100s, and that's your signal to buy this. But, you really could start scaling into QClean pretty soon. So all these clean energies are where you're going to want to invest, and you're going to want to invest heavily because they're technology and they benefit from AI, and not only from the demand on the AI side, but all the technology and clean energy is getting good very, very fast. I think the TAN is another one that you have to pay attention to. I mean, just again, take a look at this 10-year chart, right? Either the whole industry is going away, which it's not, it's growing faster than anything, or it's going to rebound. So this Trump pessimism in the clean energy is just, it's false pessimism, right? The growth rates haven't fallen. Trump wants energy to be cheap, so he's not gonna rain on any of these parades. He's just not. He's meeting with the oil and gas companies who have been doing what? They've been trying to get into these businesses. It's foolish. It's emotional to think that these are suddenly going to go away. And yes, everything in energy is good except oil. Oil is a trade, right? You're looking for a pop in oil prices because of an international event. The other day, Trump said something's going to happen with Iran maybe soon, and then we bombed the Houthis 2 days later. So, obviously he knew that was coming. And I think that Israel is going to bomb nuclear facilities in Iran. I was talking to a defense intelligence guy who's a subscriber, and he made a point, which I've been aware of, and I don't really pound the table. I mean, I wrote the article way back in 2017, but there are people in the Iranian government, the mullahs in particular, who are okay using nuclear weapons, right? Because they're okay bringing the Holocaust. They're okay with it because that's their ticket into heaven and renewing the planet or ending the, I don't know. I don't understand the exact theory, but there are people there who, because of their religion, the extreme viewpoint of their religion, the one that they glom onto, the one that they've twisted their brains into deciding it's okay to wipe out billions of people. That is why Iran can't have a nuclear weapon, because there are people in power who would use them. So I think that Israel is likely to blow some of those up. I think at this point, maybe we are. I know that Donald Trump has no love lost for the people who tried to assassinate him. They have been trying to assassinate him for 9 years, 9 years now. So I don't love the oil trade, but our specific oil investments are natural gas rich oil investments, in the Delaware portion of the Permian. So you can trade oil futures for sure, but that's not part of my service. Maybe Teresa will do it with you on the side. But you can say everything in energy is good, but really you should focus on what's best. And what's best is solar and batteries and efficiency and biofuels, because Trump loves the farmers, right? That's what he says. He's going to help the farmers. So you should see all that coming. And you have to remember our particular SAF investment is in California, which is supporting it. And by the way, international flights have to use it. San Francisco is an international airport. Los Angeles is an international airport. So will it be mandated to use so much within the United States on domestic flights? I don't know that changes very much. But on international flights, it's going to happen, because if you fly internationally, you're following their rules too. All right. I'm just going to tell you to go out and have a Guinness now. It is St. Patrick's Day. I am taking off at 3:00 as soon as the market closes, and I'm going to have my Guinness, my one and only, because I really have pretty much quit drinking about 90%, just not liking it anymore. Did too much of it when I was young. All right. I will let you go. The dividend stock list is half done. I should have it finished tomorrow. If not tomorrow, Wednesday. But definitely by Thursday morning, because Thursdays I am babysitting again for about 4 or 5 hours. So it is the Dominic and Hulkpa show is what we're calling it. And Dom and I spend 4 or 5 hours together between him being done with school and getting picked up by his dad. So last week we went to the museum. The week before that, we had a rousing trip to Costco where he got to run around the aisles and have a slice of pizza. And I think this week we're going to find a library. I want to introduce him to the downtown Milwaukee library. All right. I'll let you go. Go have your pint of Guinness. And yeah, that's about it. That's all I got for you today. Go enjoy your pint of Guinness. All right. Have a good one.